Hello everyone, my name is Muhammad, analyst of Golden Brokers Limited, and today we'll make a review of performance of one of the largest agricultural machinery company in the world, which is the Deere Company. We'll also explore the attractiveness of the stock, the growth driver, and what it has in mind for the future. Before we dive into that, let's check out a brief history of John Deere Company and how it has become one of the most well-known brands in the world today. Deere and Company origin dates to 1836 in Moline, Illinois, when John Deere invented one of the first steel plow that could rake the soil without clogging. Following year, Deere established a business to manufacture and market the plow, and his own company was incorporated as Deere and Company in 1868. In 1918, Deere bought the maker of Waterloo Boy tractors to enter the tractor business. The tractor soon became the company's basic product. The company launched its first foreign operation in Canada in 1931. Eventually after that, Deere also expanding its overseas business to more than 70 countries until today, including in Europe, Argentina, Mexico, Brazil, South Africa, and India. After 1958, when the company surpasses International Harvester, it was the biggest agricultural equipment manufacturer in the US. As of 2018, Deere has employed about 67,000 people worldwide, of which half in the United States and Canada. It is now the largest agriculture machinery company in the world, and in 2021, the Deere Company was ranked at number 88 in the 2021 Fortune 500 list of largest United States corporations. Now let's see how Deere performed. Based on its stock price growth from 5 years, it has driven up by a staggering 300%, with more than half of it was in the past 3 years, around 14% since last year, 32% in the last 6 months, and 10% since last month. This is a consistent, stable growth which portrays the strength of the largest machinery company. Deere also show a strong earning per share for the quarter ended January 31st at $2.92 per share on February 18, beating the consensus of $2.27. It is expected to grow 17% in the next quarter to $6.68. Now we see at the income statement, Deere annual revenue for 2019 was $39 billion, a 5% increase from 2018. And for 2020, it was $35 billion, a 9% decline from the previous year. And in 2021, it was at $44 billion, an increase of 23% from the previous year. And for the 12-month ending January 31st, it increased 20% year over year to $44 billion. The company appeared to be a big loser in the COVID-19 environment as commodity price slumped, but then make a stunning reversal motivated by the high crop price as it ride out the pandemic effect. Historical dividend payout and yield for Deere was made since 1989. The current dividend payout for Deere is at $4.20 and the current dividend yield is at 1%. Next, how does the stock seem from a technical point of view? The stock in the long-term trend is looking strong and positive, while in the short term is looking normal. Currently, Deere stock is on the rise and trading in the upper part of 52-week range. As of this time this video was made, stock was trading at $436.75 a piece, and the stock is trading between the support zone ranging at 313 to 347 and a resistance zone from 455 to 488, as you can see in the chart. The stock trend also trading above its exponential moving average EMA 10, 50, 100 and 200 price. Therefore, we view that bullish bias will be suggested in the upcoming session. Looking at the opportunity and challenge for the company, we at Golden Breaker Limited are optimistic on the outlook. First opportunity that we derive is investment in advancement of farming technology. Customers are increasingly relying on advanced technology, smart farming solution, and mechanization to run their operation. Advances in data crunching, satellite imagery, and mobile computing power has given rise to digital agriculture. For example, many farmers now can pay a monthly or annual subscription fee for historic and predictive farm-specific data, like how many seeds should a farmer place in each row in that side corner of their land and that side corner of their land, and then when might be the optimal time to apply fertilizer this season, and then are corn rootworms and weather likely to be worse than usual. And in that, John Deere has emerged as a leader in the category and the technology. Paired with its industry-leading farm equipment has led to boom in the stock, which has delivered a total return of more than 10,000% since its debut. Secondly, automation. Demand continued to grow for popular features, including automatic guide machine in the field and equipment that plant seed and apply chemical and fertilizer with exceptional accuracy. Over the long term, rising population and elevated global demand for food and efficient water use will fuel demand for the industry equipment. Third, customer service. John Deere and Company also announcing that the company is enhancing its diagnostic tool and expanding the availability to increase the safe repair. Expected in May 2022, it will allow customer and independent repair shop to buy a customer service advisor diagnostic tool directly from its website. The company also added that next year, it will launch a service with a mobile interface that will allow customers to download software update directly to some of its equipment with a 4G connection. Fourth, soaring commodity price. Farm equipment industry has been gaining from the rising agricultural commodity price. This in turn is driving farm income and encouraging farmers to invest more in agricultural equipment. Russia's invasion of Ukraine in February has created uncertainty in the global economy. Being the world's largest grain exporter, escalating tension between these two countries has fueled concern of impending supply disruption. Corn and soybean price, the most important grain for cash crop farming, also are moving higher. Corn price have gained 33% in a year and currently stand at $742 a bushel amid supply concern and export disruption from the Black Sea region. And for the limitation, cost inflation and supply chain will give challenges for the company. The industry participants are encountering supply chain tightness and raw material cost inflation, particularly of steel as well as increased transportation costs. Shortage of labor might affect the production level too, to impair ability to meet demand. However, these headwinds are expected to abate throughout the year. In conclusion, the Deere stock covers many areas of the agricultural industry. Agriculture is a life-sustaining operation, and there are numerous ways for investors to earn a piece from this action. The scale required for operation has led to the market power being concentrated in a handful of titans. As a company with healthy profit, cash flow and dividend, in our opinion, the Deere and Company will surely offer excellent opportunities for the investor. Thank you for listening to me. We'll meet again in the next video.